Amer, of course, looking at the UAE and Saudi Arabia in particular, we are still at that point on these PMIs which separates expansion from contraction. These economies still looking broadly pretty good here. Egypt in contraction according to these latest numbers, though. What's your take on what's happening here? Because when it comes to the overall equity investing outlook, you say the geopolitical situation remains unclear, but it's time to take on more equity risk. Can you unpack that for me?
Sure. Thank you, Dan. So the PMI has been quite volatile over the past few months, and this is not foreign to what's happening on the earnings front. We've seen the earnings peak a few quarters ago. The sequential progression of earnings in the UAE, at least, has been flat to slightly down. So this is one of the risks on our radar, which is where are earnings going from here. However, fundamentally, it's still looking good. The year-on-year progression of earnings has still been quite strong. We have mid-teen growth. This is faster than the US, of course. And so all in all, we think that a combination of good earnings, fundamental strength with solid GDP numbers, and now extra liquidity being injected by central banks around the world, add to that compelling valuation, still makes a case for a positive equity environment. Of course, the risks are increasing.
Okay, so risks are increasing, but where are you seeing the most compelling valuations right now, particularly across UAE and Saudi?
So we look at the GCC, we've been pounding the table on the UAE. We continue to see very, very good value in the UAE, particularly at DFM. I mean, we look at the markets top down, but also bottom up, top down. If you look at the PE, which is the simplest measure, DFM is an outlier in terms of compelling valuation. We're talking, high single or low double digit PE valuation here in Dubai. This is very compelling. And so overall, in conclusion, I would say the UAE is still a beacon of value from our perspective and a beacon of growth.